Hello, today we are going to talk about statement of cash flow, which is one of the most important topic in ways, so pay full attention, yeah? So basically, we will cover these 3 bullet points in our video, okay? And the other 2 bullet points we will cover in the next video, so stay tuned to the next video, yeah? So in this video, we will talk a little bit about SOCI and SOFP, and we will talk about the differences between profit and cash, and lastly, we will talk about the purpose of statement of cash flow. So let's start. Okay, we start off by talking about the relationship between SOCI, SOFP, and SOCF. Okay, so statement of comprehensive income, also known as the income statement. Basically, statement of comprehensive income will show the operating result, which is the financial performance of that business during that financial year. So basically, income statement shows you whether this company is making a profit or loss, okay, by comparing the income that they earn and the expenses that they incurred, okay, in order to determine whether the company is making a profit or loss. Statement of comprehensive income is based on accrual accounting basis, where income earned and expense incurred does not reflect cash flow. This is because some income are earned but may not be received. For example, accrued interest income. When we talk about accrued interest income, which means that we already earned that interest income, but sometimes we haven't received it in cash. So some income are earned but may not be received. For example, like accrued interest income. Some expense are incurred but may not be paid. For example, like accrued wages. Okay, we already incurred the wages expenses, but we still owe our employees wages. Okay, so some expenses are incurred but may not be paid. For example, accrued wages. Hence, we can conclude that the profit that we earn during that financial year does not reflect cash flow. Okay. Next will be statement of financial position. So balance sheet shows the asset, liability, and equity of the business on a particular date. It also shows the financial position of the business. Okay. Statement of financial position also shows the cash at bank balance at the end of the day, but it does not explain why the bank balance has changed over the accounting period. So that's why we need statement of cash flow, because statement of cash flow here identifies the types of cash inflows and cash outflows of a business, okay, over a period of time, okay, to explain the changes in cash balance over the period. So statement of cash flow is also very useful in assessing the liquidity and solvency of an entity, and to see whether this company is generating enough cash to finance its operations or not. Now we will look at all these transactions to see whether there is any effects on the cash or whether there is any effects on the profit. Okay, so repayment of borrowings. When I repay my loan or when I repay my borrowings, okay, my liability will goes down and my cash will goes down as well. So it has an effect on the cash. Okay, so repayment of borrowing has an effect on cash. Okay, the next one will be making a sale on credit. When I make credit sales, okay, credit sales account, my sales goes up, okay, debit accounts receivable. Okay, so since I credit sales account is an income, and income is something to do with your profit. So this will have an effect on your profit. So next one, buying a current asset on credit. When I buy a current asset on credit, current asset goes up, liabilities goes up as well. So it's nothing to do with your profit and it's nothing to do with your cash, okay, because there's no cash involved here. So the third transaction, okay, there's no effect on profit and cash. Next one, receiving cash from a credit customers. Okay, I receive cash, so cash goes up, debtors goes down. Okay, so cash goes up, okay, there's some movement in your cash account, so there will be effect on your cash. Next will be depreciating a non-current asset. Okay, so when we depreciate a non-current asset, we don't pay others a single cent. Okay, so there's no cash involved, but depreciation is an expense. so it will have an effect on your profit. So depreciation has an effect on your profit, but there's no effect on your cash. So the next one will be buying some inventories for cash. So when I buy inventories using cash, my cash will become lesser. So there will be an effect on cash. Okay. So the next one will be making a share issue for cash. That means I issue shares and get cash in return. Okay. So my cash will become more. So there will be an effect on cash. Okay. And there will be an increase in your share capital, which is not recorded in profit. So there's no effect on profit, but there will be some effect on cash.